Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. In this video, I'm going to show you my Monday buy that I did. What I do is every Monday morning, I deposit $100 into my taxable M1 stock brokerage account, and that's what we're looking at right now on the screen. This is my Average Joe Dividends portfolio. This is about 15% of my current net worth. The rest of my net worth is invested mostly into ETFs like VTI, VU, VTSAX, and SCHD. But I like to do some individual stock investing as well, and we'll get into that. So we can see with this portfolio over the last year, it's had a money weighted return of 14.68%. We count the dividends in, and it's at 19.49%. We'll go let's look at the last month, and we've had a 3.84% return. And then we'll just take a look at today is an up day so far, up 0.54%. Of course, the market's variable, but over time, though, I believe the market does go up, and history does show that. But let's get into the activity log here in a second. But where the $100 goes in the Monday videos is I let M1 do the picking. What I mean by that is I have auto invest set up on this account, and what that means is any new money that goes into the account, you can see the auto invest there that's clicked. What it does is it looks at the actual percentage that I have and the target. So you can see, for instance, for my ETF slice of the portfolio, it is underweighted because the actual is 0.2% under the target. The dividend portfolio and the 12 more dividends, those are right where they're supposed to be. So the $100 is going to go into the ETFs or any additional money until that target is met. Then when it gets up to that point, it's going to spill over into the other slices. So let's go into the activity log. We'll see what I bought, and we'll update my Google Docs spreadsheet, and we'll see the change in the dividends. If you're new to the channel, welcome to the channel. I'm Average Joe. I've been doing these videos for about 4 years, and the reason I'm doing this is to show you how I built this dividend portfolio to build passive income and growing passive income. And please click the like button to help the channel out, and subscribe. And that's the best way to help out the channel, because I'm not trying to sell you guys anything. I'm not trying to write a course, no Patreon, don't buy me a coffee, nothing like that. I want you to invest all of your money into yourself. So here in the activity log, we can see here is the one buy for $100. We'll click on that, and it went to SCHD, which is a very popular dividend paying ETF from Charles Schwab. So let's click on it. We'll see how many shares we bought with that $100, and the quantity was 3.63509 shares of SCHD. So let's go. Actually, let me show you the holdings tab. And SCHD, that is the largest holding within this portfolio. While I have 52 positions, you could say 2 of them are pretty well diversified, and they're diversified in different ways. With SCHD, you have about 104 companies that pay a growing dividend, and then BST, this is different. It's well diversified, but it's a covered call strategy for income. So those are my top 2 holdings in this. And once again, this is 15% of my total net worth. The other 85%, we'll get into it a little bit later in the video. I'll show you what that is. It's in boring ETFs. But you can see here, if you want to see what's in this portfolio, I'll leave a link below so you can see my M1 pies and see every single position that's in the portfolio. It's really just blue chip stocks, really. Boring kind of investments. A few in here that are high growers, like Nvidia is in here. You know, like an Oracle's done pretty well for me, and some others, like even like a Costco, which is I've doubled my money just with Costco alone. You can see we just have a good mix of dividend paying stocks with good stocks that pay a good dividend now, like a Verizon, and some that pay a low dividend but grow their dividend, like Nvidia pays a tiny dividend, but look at the return I've had with Nvidia. I kind of want a little bit of everything. Some people criticize me saying you could have higher dividends if you just put it into X stock, whatever it is, but I don't want to do that. I don't want to put all my eggs in one basket. One, and I want growing dividends. I don't want stagnant dividends, or even a 2% from Verizon alone is not enough for me. That's not going to outpace inflation. And I need things that are going to outpace inflation and grow for me over time. So let's jump over to my Google Docs spreadsheet. And what I do over here is I track all the positions in the portfolio. I track more than that too. I track my total net worth as well. We'll get into that in a minute. But you can see this sheet, and I'll leave a link below for this Google Docs spreadsheet. It's awesome. I created it myself. It's free, and it tracks, like I said, everything in my portfolio: company, ticker symbol, share price using a Google Finance function. Here's the average price I've paid, and I'm using the VLOOKUP with M1 data. We're going to dump some data from M1 into the sheet, and we'll get into that too. Here's the shares I own of each position. Here's the value if I were to sell it. Here's my cost basis, and then here's my gain or loss in each position. And then here is the gain or loss in a percentage. Anything above 25%, I put in green to kind of highlight that, kind of more of my growth stocks. Look at Nvidia. There, we're going to see some others that are over the 100%, over doubling my money. There with like an Oracle, even an American Express. A lot of people don't talk about like an American Express as much of a dividend payer, but they've been a dividend grower as well. Double-digit growth with American Express, while they pay a tiny yield. Now look at my yield on cost; it's nearly double that. You can see here is the dividend per share, and these are quarterly dividends, except for the ones in blue. I have two monthly pairs, which are O and BST. And then we can take a look at, here's the current yield. You can see some higher yielders like Verizon and some lower yielders like an Apple. But you can see here, let's just compare like American Express again, where I've nearly doubled my money at that 90% gain. They pay a tiny dividend, but there's growth here. But look at Verizon, I've really 10% compared to 90%, but Verizon pays that huge yield. So I kind of have a good mixture of everything in here. And you could say, well, Joe, why not just put everything into SCHD? And the reason I don't do that is SCHD does not have REITs in it. I want a little bit of REIT exposure, and some of the growth kind of stocks like a Broadcom and things like that, they're not in that portfolio. They cut them out. But look at what Broadcom's done for me. Take a look at this. I've made 217%. Essentially tripled my money there. Look at the current yield; it's low. That's probably why it was removed from SCHD. Is probably the yield maybe on it, and so they kind of took some of the gains off of that. But look at my yield on cost with Broadcom; it's over 3%. And so getting near that $10 mark. And you can see the ones highlighted in green for my next dividend. Anything $10 above is in green. And everything on the sheet here, it is arranged by the pay date. So once I get the new dividend for Home Depot, it's going to be approximately March 13th, right around there. I'll put the new dividend date in there, and I'll resort it, and it's going to push Home Depot in the middle of March. It'll put it here, but I don't think they have announced their new dividend yet. And the way I look that up is on this sheet I have a couple links, and maybe we'll just look up this one really quick on dividendinvestor.com. We'll look up Home Depot real fast to kind of show you how I do this. Every week or two I will just, from the top of the list, I'll just do a search, or if I see news out there for an announcement of a new dividend, I will just go ahead and update it. But Dividend Investor is pretty well updated. You can see here they have not updated their new dividend. So I'll just check back on Home Depot. And then, I'll look at Microsoft, Avista, kind of the top ones. We know SCHD is not going to announce their dividend until March. Of course, it's going to be a lower dividend because Q1, they always do that. what I've done is I've hard coded the current dividend, or at least what the new dividend would be if SCHD is going to pay that 0.2645. That was their last dividend. I think it's going to be like 21 cents around there. So it's really going to reduce this dividend. Let's just type that in real quick, and we'll see. Likely going to be getting this much. So we're going to see kind of a quote dividend cut with SCHD, I'm predicting. But that's what SCHD does every Q1, and then Q2, 3, and 4 is going to be much higher. That's just how it goes. But we're going to see this dividend go up because remember, with all my rambling, we bought some shares of SCHD. We bought 3.63509 of SCHD, and we're going to update this sheet where it's going to put the new number of shares. And of course, I could just type in the new number of shares. You can see that here's the current shares I own for SCHD, 3,632. We're going to see that go up. You can see here's the current value. Here's my cost basis. Here's my gain or loss, including the dividends. And here is the gain or loss in percentage. And some people have criticized me for having BST in the portfolio, but look at this. My gain or loss for BST it's smoking SCHD right now, and to me it's a good income play. So take that. So let's go over. We'll update the sheet over here with the new amount of shares and average price I paid for SCHD. And how I do that is I go over to M1 Holdings tab, and really I only have to just update this. I can just grab probably just even this right here. Normally I grab everything, but since we only bought some SCHD, I think we can just update this, and we'll see if there's an error in the sheet. Normally I just go name and I go all the way down and grab all the data. Let's see if we can take a shortcut here. So we'll go to the M1 data tab, and what this does is it takes every position in the portfolio and aligns the shares, cost basis, and average. And when I do the paste special here, it puts it all in the A column. And what I did was I aligned it here. I put the columns B, C, and D to pull in the shares equals A11. You can see where the shares are aligning there. And then the cost basis is on line 13. And then the average you can see is on 12. And I just copied that down pretty much down the line, and then it aligns it for all the positions like BST. It's aligned it, and I just do a VLOOKUP to pull the shares, cost basis, and average cost. And just with the messy data from M1, just figure out a better way rather than constantly typing this in over and over, especially when I do multiple buys. I could do, I could buy fractional shares of every position in the portfolio, and it would take me the same amount of time to copy paste. So I like to find quick shortcuts or automate things, and that's what I did. We can see here was the previous dividend was $9.6069. So again, if SCHD has the same dividend that they had in Q4 2024, which they won't, it would be $961.65. And one thing I forgot to do was I did not type in the old monthly cash flow average, but I'll show you what it was prior. It's on the monthly average dividend tracking tab. So we're going to take the 1041.46. We're going to put this on here, 1041.46, once I get to the bottom. And then this was the event was a $100 deposit. And what I do is anytime I have an event where I deposit money, I drip dividends, there's a dividend increase. You can see like Prudential had a 4% dividend increase on the 5th, and that added 62 cents of dividend income every single month going forward for the portfolio. And this event was a $100 deposit. We bought the 3.6 shares of SCHD. That adds 32 cents of dividend income to this portfolio every month going forward. Of course, it increased the quarterly and annual as well. So let's go on over to the dividend tracker tab. And I've been doing these videos since January 2021. You can see the portfolio value was then. and the dividends paid. Let's get into present day. We are now in 2025. It's hard to believe. And we can see the portfolio value rounded to the nearest $100. Here are the dividends paid to me so far in February. And we can see what the full month last month was, January, and 638. We can compare that to January 2024. So we're going up. So we'll see how much we exceed dividends compared to February 2024 at the end of this month. And again, subscribe to the channel so you don't miss that video. I go into M1. I show you actual proof rather than what most YouTubers do with dividends is they read from a spreadsheet. There's no proof in the dividends that they received. I'm not calling them liars. I'm just saying the proof is in the pudding, and I like to see proof and see what others are doing. That's why I do these videos, is to show you how to build truly passive income. Of course, there is a little bit of work to this, doing these videos and, collecting the data from M1, things like that, maybe picking the stocks and stuff like that. But to me, it's not work at all. I enjoy doing it. So let's scroll over. We can see here is the average monthly dividend, and we have increased that. And we, for the month, we have increased it by $4.48. And then that's a month-over-month gain in the dividend income, monthly dividend income by 0.43%. And we take a look at the annual dividends. We are close to 12.5 at 12.497.51. And we've increased the annual dividends for the month of February by 53.75. We had a $100 deposit. We're up to $300 in deposits for February 2025. So let's go ahead. We'll close out the video. We'll go to the total net worth statement. And before I forget, I do 2 buys per week. Like I said, today's video, this is auto invest. I put $100 in. It goes where there's an under allocation or where it's underweighted. And of course, we saw where it went to the ETFs, where we have BST in there and SCHD. You can see there's the underweight there. But what I do on Thursdays or Fridays, it's been Thursdays lately, is I deposit $100, but I pick 5 stocks and I put $20 into each of those. And then we see the new dividends going forward and update the portfolio, things like that. So I recommend subscribing, and also please like the video. It seems like I have a lot of viewers who are watching the videos, but I don't get a whole lot of likes. I think it's just people like to watch the videos. I get it, but if you do like the channel, just support it by clicking the like button, and that helps me out. So here we are on my total net worth statement. Like I said, most of my money is in boring ETFs. Over at Vanguard, I have an IRA, Roth IRA, taxable brokerage account, and I have the current value is at $484K over there. I have a 401K at $103K. It's an S&P 500 fund, only that. One of the mistakes I made, I think, of course, everything I'm doing and saying is not investment advice. It's just, I'm just showing you guys, I'm trying to inspire you guys to build your wealth. But one mistake I made was investing in bonds. I think that's a complete waste of money and time. If you're in your 20s, 30s, or even in your 40s, invest in the stock market like an S&P 500. It's going to grow a lot faster than bonds. Bonds are for old people, or if you're retired. I think right now I would rather carry cash than bonds, and that's going to be my plan, is to be 100% in stocks and then have cash to back me up. Like if the market has completely tanked, we get a 50% reduction like we saw in 2008, 2009, well then I will draw cash or just dividends. I'm not going to sell any shares, but my plan is not to sell any shares in retirement. It's to live solely off of my dividends. So, or carrying on with this, M1, I have an IRA over there as well, valued at $719. And here's my dividend portfolio that I went to extensively at $278K. I have a 1-year emergency fund over at M1 getting 4% interest. Synchrony, I have a 6-month emergency fund. And then here's 2 months pretty much of expenses, or it's more than that, over at Capital One, getting 3.7% interest. They lowered it. It was at 3.8 just last week. So anytime they reduce the interest rates, I change those because I track the average monthly dividend. Even though interest is not a dividend, I kind of track it like that. We can see where I have the interest rate built in there, the 0.04% in there. So I get like an average of what I'm going to get off my cash per month. You can see that right there with over at M1 in Synchrony. You can see this is just cash interest right here at about $324. And of course, it's variable to the interest rates. And then I total it all up, my average monthly dividend, including IRAs, and it's a little bit lumpy with the ETF. So what I did was I took the 2024 dividend and then I made it as an average monthly dividend, and then added them all up. So actually, it's going to be a little bit higher because the dividends usually, they increase yearly, but instead of having it lumpy, with some of these, SCHD is lumpy and paying their dividends. VTI, they don't pay a constant dividend like individual stocks do, like a Coca-Cola, which is steady until they increase their dividend. Pepsi's like that, Home Depot, just reliable, but ETFs are not. They're variable. They tend to increase though when you count up the entire year. But so I took the 2024 dividend to kind of make it even. And then that's where I have the total dividend in there as well to kind of have the total. So if I was 59.5, this would be the paycheck on average I would get from my savings interest and from my investments. So almost $3,500 and counting. And you can see here is my total net worth. I've got my home value in there. That's my only liability. And, or the mortgage I've subtracted out, rather. This is the mortgage. And that's the home value line right there. According to Zillow, I know it's not 100%. It's not perfect. And really, owning your home doesn't really do much for you as far as early retirement until you paid it off. But a paid off home, all it does is lower your expenses. It's very important, but it doesn't propel you really and provide you income unless you're renting out rooms in your home. So here's the breakdown of my net worth. Stocks, very heavily invested in that. A little home equity and cash in there. And then here's the breakdown of pre-tax and after-tax. A lot of people are caught in the middle class trap where everything, their whole net worth is wrapped up in their home and in their 401k. And those are not easy to tap into. And a lot of times you don't want to tap into, like, getting HELOCs, home equity line of credits, things like that. A second mortgage. I think I see more people in trouble financially who have that. They have a HELOC on their homes for home improvement, things like that. And I'm going to cash flow all those. I will never take out a HELOC to renovate my home. Never, ever. So we can see here I was tracking my net worth really carefully. Starting November 2022, you can see how that's just gone up and up and up from 1.2. We closed at 1.8 in January, but all-time high was November 2024. We're still not there yet. 1,827,000, so we're off there by about $9,000. So pretty close, but not quite at all-time highs for my net worth. And this net worth, just give you some background. I've never been a very high earner. I don't make a ton of money. You can see what my W2 income net is, not super high. I do contribute to my 401k, things like that, but I don't even max it out right now. I've kind of pulled it back because it's just me pretty much paying all the bills for everything. So, but just to let you know, it's just been a slow process over a few decades of saving and investing in boring things like these ETFs. That's really where the bulk of my net worth has come from. Now, that's not to say my dividend portfolio has not done well. It's done quite well, and it's going to be generating far more income for me than the ETFs. I require less in value from this to generate much more income, and that's why I built this dividend portfolio. Was it's nice to have this net worth. Of course, you can use the 4% rule to determine where you're at, but when things like 2008, 2009 happen, I want to have income. That's really what it comes down to, is because when you have the stock market cut, literally cut in half, it's really, this is what you want, is what you want your expenses paid for, and that's what it really comes down to. Of course, having net worth in these things is great. It provides stability, but you really can't count on these values. I can't count on having this net worth 1, 2, 3, 4 years down the road. It'll likely be higher, but I don't know what's going to happen. It can go up to 2.2 million, let's say in 2 years, but it can halve back to 1.1 million. But and I don't want to sell shares, especially when it's halved like that. And that's why I'm concentrating a little bit more on the dividend side of it. And I didn't really get it before. I subscribed to like the simple path to wealth. Just invest in VTSAX, VTI, call it a day. You're going to do great. At least history has shown that. But that's why I started adding this in, was to kind of protect against that. I don't want the market dictating when I can step away from work or have more freedom. So that's why I added this. And I tried real estate before. I had a rental house. It was a complete nightmare. Complete nightmare. I had one good tenant and I had two bad tenants, and I said, forget it. Got rid of that house and I never looked back from it. So that's sorry to ramble on about that, but I'm just kind of giving you guys some background, and hopefully you guys can glean something from it. But thanks for sticking to the end of the video. If you get value from it, please click the like button. Also subscribe so you do not miss future videos. Again, the buy, it was all in SCHD. Let me know in the comments below what you guys are buying this week. Thanks again, everyone. I hope everyone has a great rest of their week. Everyone take care.